What's going on, legends? It's Saturday afternoon. You might be wondering, Jip, what the hell are you doing? But last night we had a massive take profit target on a near short, and I really just had to share this trade recap with you guys. I think that these kind of trade recaps where I also showcase to you guys that I always take these trades in advance, and I always especially share these trades in advance, not like your favorite influencer showing profit P&Ls, showing profitable trades to you guys, but never ever sharing any analysis or any actual signal or trade setup with their followers beforehand, but only in hindsight. I actually think that I'm one of the few traders who always, almost literally always, shares every single trade in advance, just like this near short as well. So it's Saturday afternoon, but I've set up the studio right over here in my house, as you guys can see, and I'm about to record a very profitable near trade recap for you guys. Over here on my right screen, you guys can see the actual outcome of the setup right over here. So we entered and we made a beautiful exit. Then obviously as well the profit P&L screenshot, but guys, obviously, as I am a man of my word, over here on the left hand side, we can see the exact signal shared beforehand in the Discord server that you can join for free through the link in the description down below. As you guys can see, the exact same setup. By the way, the second entry didn't get hit, that's why I removed it, but the exact same setup that eventually played out. Over here you guys can see that I was bantering around a little bit with Justin as well. Justin was in a few crypto longs, but I was looking for shorts, and that's why we were bantering around a little bit. So let's dive into the analysis. So guys, what we always do whenever we open up a chart is that we determine the higher time frame draw on liquidity. Now on Near Protocol, this one is quite simple if you were to ask me, because we had all of these lows over here at the bottom of the range that were untapped. Now usually I would say that liquidity isn't as simple as just marking out equal lows like we see over here or equal highs. But in this case, what we were seeing is that we put in this low over here, and after putting in this low, we get a strong bounce to the upside. Now that strong bounce was providing us with some kind of a break of structure over here. Then we saw another move to the downside where we front run the low over here and we get another bounce towards the upside. That bounce towards the upside is giving us a fake break of structure over here and some local lower time frame fake break of structures over here. Another move to the downside. Once again, we front run now these equal lows over here. Once again, we get a bounce towards the upside, and that bounce towards the upside, if we move our eyes to the 1 hourly time frame over here, was interesting to me, because once again, guys, that bounce towards the upside gave us a fake break of structure over here and another fake break of structure over here. What are these fake break of structures doing? They're engineering liquidity beneath this low and beneath this low. So basically, by analyzing the price action from the past, we can see that our draw on liquidity on the higher time frame is definitely towards the downside, towards all of the lows over here, and eventually we had some more untapped lows right over here for Near Protocol as well. So that means that based on the draw on liquidity, we can start looking for shorts. And when we start looking at the local structure to look for a potential trigger, there were a few things that were catching my eye. Now, like I said, guys, I absolutely love the way that we get this fake break of structure over here. Why so? Because first off, before we get this fake break of structure over here, look how we take out this massive draw on liquidity over here. Now, why was there so much liquidity resting beneath these highs? Because of this fake break of structure to the downside. This is where we were forming a local range. This is where we were breaking down out of that range. And we know how retail traders think. If we move our eyes once again to an even lower time frame, we can see that after breaking down, we get another fake break of structure to the downside, and we get another fake break of structure to the downside. When we get a breakdown like this out of a range, if price is truly bearish, guys, it's not going to offer a perfect retest of that range low like this, where people can short the retest of this obvious range low level with their stop loss above the range high and then targeting lower levels, right? So after getting the rejection over here and putting another fake break of structure into the downside, even more people start breakdown shorting the price of near. Where are those people going to place their stop? Above the high over here, above the high over here, but most of them will use the previous range high to cover their stop loss, which means that once again, guys, by analyzing the price action from the past and trying to figure out what the human reaction and the human behavior will be based off the previous price action, we can figure out what kind of low probability positions retail traders are entering, but more importantly, where the stops of those low probability positions are resting on the chart. Now we know that there was plenty of liquidity resting above these highs over here and also above this high over here. So when price made a push towards the upside to take out all of that liquidity, there was a potential signs that bears were getting the opportunity to start accumulating shorts. Now, why do I really like this local sweep of that high over here? First off, because we don't close any candles above. We don't open and close any candles above. We just wick above that high and we create ourselves a beautiful swing failure before getting that move to the downside. That was reason number one. But why was there important liquidity resting above this high? We can analyze that by analyzing once again the price action from the past. We get a strong pullback to the downside. When we are seeing the pullback to the downside, we are seeing several fake break of structures to the downside. Why are these fake break of structures, guys? And that is always important to realize. So I've marked out 3 fake break of structures over here. The first one, this one over here, is a fake one because the low that we break through did not bring us to a higher high compared to this high that brought us to this low. Therefore, it's an insignificant low to break. This low, right, was insignificant to break as well. This low was insignificant to break as well. How so? Because these are bringing us to higher highs. Why are they insignificant? Because of the fact that, guys, this is the low that brings us to a higher high over here compared to this high that brought us to this low. It's not this low that brings us to that high. No, it's the lowest low that we form that brings us to this highest point. Therefore, this was the significant low to break to get a valid break of structure. And therefore, all of these break of structures over here, they were fake. So what were they doing? They were trapping people once again into opening up invalid short positions on the way down or low probability short positions upon the pullback. Where are those people placing their stop? They are placing their stop either above these highs over here or above this high over here. And therefore, we were mitigating a valid and high probability liquidity pool over here, swing failing the liquidity pool, and then pushing to the downside. So now we have finished up on the liquidity part. We have a valid and high probability liquidity sweep number 1 over here, and a valid and high probability local liquidity sweep over here. When we start looking at the market structure break, because that's obviously what we need to the downside in order to get a valid trigger to start looking for shorts and find a valid invalidation, we can see that over here, price was breaking through a significant low. Why was it significant low? Because the low that we break through over here brings us to a higher high compared to this high that brought us to this higher low. And therefore, it's a significant low to break. And we are seeing a candle open and a candle close over here beneath that low that brought us to that higher high and therefore became significant. So we have our market structure break to the downside as well. On our way towards the upside over here, we can see that we were forming a local uptrend over here as well. And that local uptrend obviously got broken at the same time as well. So liquidity is pointing towards the downside. We are seeing some bearish sweeps across the board. And also we have ourselves a bearish market structure break to the downside. So I start looking for an execution and I start looking for an invalidation for my trade. Now my invalidation, guys, was based on statistics. It was the daily high of yesterday. What do I mean by statistics? I cannot go back into the dashboard in hindsight, but I'm using the Minoma statistics dashboard. I explain all of this in my Discord server that you once again can join for free down below. But the statistics dashboard was showcasing that the daily high that we formed yesterday over here at hour 0 during the daily candle open was a high probability invalidation and only had a low probability to get broken. So that means that I found my invalidation based off using statistics on the daily time frame. Once again, if you want more explanation on those statistics, make sure to join my streams that I host every single week in the Discord server. Then I start looking at the execution. And with the execution, guys, it is always important to realize one thing and one thing only. We always want to execute our trades where other people are getting stopped out. So once again, to execute a trade, it's going to be important to analyze price action from the past to determine the liquidity on a chart, because only then we can know where people will get stopped out, and that's always where we as traders want to enter. When I analyze this price action over here, I see a fake break of structure to the downside over here, and I see another one over here. Get into the mind of a retail trader. What are they doing upon these fake break of structures? They're opening up breakdown shorts over here, or they're going to open up pullback shorts over here. They're going to open up breakdown short positions over here, or pullback short positions over here. And what highs will they use to cover their stop loss? They are going to use this high to cover their stop loss of their short, and this high. So that means that if we take out either one of these highs over here, and I didn't pick random highs, no, I analyzed the price action from the past first. If we are going to take out these highs over here, or this high over here, that's where people will get wrecked. That's where I'm interested to execute my short, or execute my short over here, invalidation over here. And we discussed our targets at the beginning of the week. So guys, that means that eventually my setup was looking something like this, where we had this low time frame breaker block as well, aligning above this liquidity, and I used the bottom of the breaker as my first entry point. If I play the replay, over here, we can see that we got filled on that first entry, but unfortunately, we didn't get filled on that second entry. And as I said, that's why I removed that second order. Now we got a push to the downside. When we broke this low over here, I decided to move my stop loss to break even because it was a Friday afternoon. I had a date coming up as well, actually. So I didn't want to get bothered anymore. But eventually, overnight, guys, we saw a massive push to the downside on near protocol. And as I showed you guys at the beginning of the video, we made some huge profits.